Hello and welcome to our channel. In today's video I'm going to show you how to look for superior growth stocks using 8 fundamental filters. The idea for this comes from a book written in 2007 by Navellier called The Little Book That Makes You Rich. The rules covered in the book for discovering such stocks are all available in ChartMill, and so we decided to turn it into a trading idea. I'm going to discuss the 8 individual filters while showing how to set them exactly in the stock screen at ChartMill. Before we start, here's a quick note. Be aware that the results you get with these filters are a good starting point for further action. You can adjust the filters as you wish, add or remove filters so that the results are even more in line with your own strategy. We recommend reading the book as it will give you more insight into why these filters are used and why they are so effective. So let's not wait any longer and start with the first filter. Positive earnings revisions. Wall Street analysts provide estimates for the earnings per share and revenue they expect the company to report in the upcoming quarters and years. An analyst who consistently overestimates these figures is not highly rated, and this will weigh on his trustworthiness. An analyst who underestimates the results is not as bad, because this is a sign of caution. Overall, you can therefore expect analysts to be quite conservative. This is precisely why upward revisions of analyst estimates are important. At the very least, you can expect them to have strong indications. And this is exactly why we should take these upward revisions as a positive sign. Our stock screener was recently expanded to include several filters related to upward revisions. And we suggest a filter where the earnings per share estimates must have increased by at least 4% in the past 3 months on a quarter-to-quarter basis. Positive earnings surprises. Companies that manage to exceed analysts' expectations several consecutive times will force analysts to revise their future estimates, and that will cause total future expected profits to be boosted and thus the stock price too. Our stock screener has many filters available covering earnings per share and revenue surprises. For this trading idea, we require at least 3 positive earnings per share surprises in the last 4 reports and an average surprise of more than 10%. More is always better, but we prefer not to set the screening criteria too strictly and carefully evaluate the result list manually. Increasing sales growth. A growth stock obviously needs to grow, and one way to measure this is to check whether it is actually selling more than in the past. Annual and quarterly sales should show significant progress. Moreover, ideally we want sales to accelerate. We add the following rules to our screen: at least 20% annual revenue growth and at least 20% quarterly revenue growth. Note that year-to-year growth compares the last trailing 12-month year with the previous year. We have not added a filter for the acceleration part, but there are several ways to do so. You can compare the most recent growth with growth over the past 3 or 5 years, or you can add a custom filter that states that the current quarter-to-quarter growth must be bigger than the previous quarter-to-quarter growth. To do so, click on the Custom tab. For the left-hand side of the equation, select Property, Fundamental Growth, and Revenue Growth quarter-to-quarter. For the comparison itself, choose Bigger Than. And for the right-hand side of the equation, select Property again, Fundamental Growth, and previous revenue growth quarter-to-quarter. The next ratio we want to take into account is an expanding operating margin. It is a good sign when the firm can increase its profitability, as it means that the firm is efficient with its resources. Operating margin compares operating profit to turnover. If turnover increases while costs rise to a lesser extent, this has a positive effect on the company's profitability. For this condition, we have added a rule to our screen that requires the operating margin to have increased by at least 2% in the past year. Strong cash flow. Free cash flow is the money left over after the company has incurred all necessary expenses to keep the business running. Producing free cash flow gives options to the company. For a typical growth company, this mainly means further investing in its own growth. The faster the cash grows, the faster the company can make additional investments. To check this, we have added a rule to our screen that requires free cash flow growth to be at least 50% in the past year. Earnings growth. Next to pure revenue growth, we also want to see the reported earnings per share to show decent year-over-year and quarter-over-quarter growth. To meet this requirement, we added these filters: at least 15% year-to-year earnings per share growth and at least 15% quarter-to-quarter earnings per share growth. Positive earnings momentum. Earnings momentum requires earnings to accelerate, so we want to see a higher earnings per share growth in the latest quarterly report than in the report of the same quarter last year. To define this condition, we have to use a custom expression in the screener that requires the current quarter-to-quarter earnings per share growth rate to be above the previous quarter-to-quarter rate. Click the Custom tab. For the left-hand side of the equation, select Property, Fundamental Growth, and then Earnings per share growth quarter-to-quarter. For the comparison itself, select Bigger Than. And finally, for the right-hand side of the equation, select Property once again, Fundamental Growth, and then Previous Earnings per share growth quarter-to-quarter. Now we've just made a filter that states that the current earnings per share growth quarter-to-quarter must be bigger than the previous quarter-to-quarter growth. A high return on equity. The company should produce a high return on equity, which means it is able to generate profits on the cash invested by shareholders. In our screen, we require a minimum return on equity of 10%. The author also mentions that he likes to see return on equity improving. When you evaluate the results of the screen, make sure to check out the balance sheet on the Financial tab of the profile pages for the stock. Here you can nicely see the return on equity numbers for each of the past years. Finally, a few tips. We strongly recommend reading the book. That way you will have a much better understanding of the author's exact reasons for using these filters. For example, the author states that specific market conditions may cause the importance of some of these used filters to increase or decrease. And you can find this ChartMill screen on the Trading Ideas page. Click on More Info and a screen appears that gives an overview of all the applied filters. There is also a link to an article that explains the various filters, just like in the video. And I will also add a link to that article in the description at the bottom of this video. On this page you also have the possibility to select for which markets you want to apply this filter. You can choose from just the US, Europe or Canada, or you can apply the filter to our entire global database, which currently consists of more than 22,000 stocks and ETFs. As for viewing the results, there are a lot of different options. The current view in this example is set to display a daily and a weekly chart with the ChartMill technical and fundamental ratings in the third column. By clicking on the inverted triangle in the blue bar next to View, a drop-down menu pops up showing a whole range of other possibilities to analyze the results. One of them, for example, is the Fundamental Growth column, which gives a lot more information that may be of interest to the growth investor. But you can just as easily create your own custom view. For that I would like to refer you to part 10 of our ChartMill Academy video series, of which you now see a link appearing in the top right corner of your screen. This video explains all the predefined views and also teaches you how to create your own custom view. All that remains for me is to thank you for watching the video, and if you found it useful, please don't forget to give us a like and follow our channel if you don't already. I'll see you soon.